Elon Musk's brainchild has been nothing short of a phenomenon. They've dominated the electric vehicle market for years, but things are changing, fast. Remember when Tesla was the only game in town? Those days are gone. The competition is fierce now. Chinese giant BYD is hot on Tesla's tail. Rivian is carving out its niche in the electric truck and SUV space. And let's not forget the traditional automakers like Ford and GM. They're finally getting serious about EVs. This isn't 2020 anymore. Tesla isn't the only kid on the block with a shiny new EV. Investors are starting to ask, can Tesla maintain its dominance? Or will these hungry competitors eat their lunch? The EV market is a battlefield. Tesla might be the king right now, but every king needs to defend his crown. The question is, can they? Hold on tight, because Tesla's stock is not for the faint of heart. This is a stock that's been known to swing wildly, up 10% one day, down 8% the next. It's a roller coaster. Tesla's market cap has soared to dizzying heights, making it one of the most valuable automakers globally. But recently, the stock has been on a bit of a skid. Investors are getting nervous. Is the Tesla bubble about to burst? Look, there's no denying that Tesla has been a phenomenal investment for many. Early investors are sitting on piles of cash, but past performance is no guarantee of future returns. The big question now is, can Tesla justify its sky-high valuation, or is the stock due for a major correction? Buckle up, investors, because this ride is far from over. Alright, let's pop the hood and take a look at Tesla's financial engine. On the surface, things look pretty good. Revenue has been growing at a blistering pace. They're selling every car they can make. Demand is through the roof. But here's the catch. Profits haven't kept pace with revenue growth. Margins are thinner than you might expect. See, building EVs is expensive, and Tesla's spending heavily on research and development. They're constantly innovating. Now, compared to traditional automakers, Tesla's margins are still impressive. But remember those pesky competitors we talked about? They're coming in hot with lower-priced EVs. Tesla needs to be careful. They can't afford to get caught in a price war. The bottom line is this. Tesla needs to find a way to boost those profit margins. Otherwise, investors might start to get cold feet. Even the mightiest ships can be tossed around in a storm. And right now, Tesla's facing some serious economic headwinds. Inflation is rearing its ugly head, driving up the cost of everything from raw materials to labor. Interest rates are on the rise too. That means borrowing money just got more expensive, and Tesla needs access to cheap capital to fund its ambitious growth plans. This is a problem. The global economy is looking shaky too. Supply chains are still a mess. And there's a lot of uncertainty about the future. All of this could put a damper on demand for Tesla's pricey EVs. Listen, Tesla isn't the only company facing these challenges, but they're particularly vulnerable because of their high-growth, high-spending business model. They need to navigate these choppy waters carefully. Section 5. The interest rate dilemma. How inflation could impact Tesla. Let's talk about interest rates for a second. They might seem like a dry topic, but they play a crucial role in the financial health of companies, especially those like Tesla. They might seem boring, but they're incredibly important for a company like Tesla. Interest rates determine the cost of borrowing money, which is essential for Tesla's growth and expansion plans. See, Tesla needs to borrow money to grow. This includes building new factories, developing cutting-edge technologies, and scaling up production to meet increasing demand. To build new factories, develop new technologies, all that good stuff. These investments are capital-intensive and require significant funding. When interest rates are low, borrowing money is cheap. This means Tesla can access the funds they need at a lower cost, making it easier to invest in future growth. It's like getting a loan from your buddy at a ridiculously low rate. It's a win-win situation for Tesla, allowing them to expand without hefty financial burdens. But when interest rates rise, borrowing gets expensive. Higher interest rates mean higher costs for loans, which can significantly impact Tesla's financial strategy. Suddenly, that loan payment is eating into your profits. The increased cost of borrowing can reduce the funds available for other critical investments. Here's the thing. Inflation is pushing interest rates higher. As inflation rises, central banks often increase interest rates to control it. And that's bad news for Tesla. Higher interest rates mean higher borrowing costs, which can squeeze their profit margins. Their borrowing costs are going up. This can lead to reduced profitability and slower growth, and that could put a squeeze on their profitability. the financial pressure can affect their ability to innovate and expand. What's more, higher interest rates make it less attractive for investors to hold growth stocks like Tesla. Investors may seek safer, higher-yielding alternatives. They can get better returns elsewhere. This shift in investor sentiment can impact Tesla's stock price and market valuation. So, interest rates are a double whammy for Tesla. They increase borrowing costs and make growth stocks less appealing to investors. They need to keep a close eye on this. Managing interest rate risks will be crucial for Tesla's continued success and growth in a high-inflation environment. Section 6. Beyond electric vehicles, Tesla's ambitions for growth. Okay, so Tesla's facing some challenges in the EV market, but here's the thing. Tesla is more than just a car company, they're a technology company, and they've got some big plans for the future. First up, artificial intelligence. Tesla is pouring billions into developing self-driving technology. They believe AI is the future of transportation, and they want to be at the forefront of this revolution. Then there's the energy sector. Tesla's not just making electric cars, they're also making solar panels, batteries, and home energy storage systems. They want to create a sustainable energy ecosystem. And let's not forget about their other ventures, like SpaceX and the Boring Company. Elon Musk is a visionary. He's always thinking big. And that's what makes Tesla so exciting. The question is, can Tesla turn these ambitions into reality? If they can, the sky's the limit. Section 7. The buyback buzz. Will Tesla repurchase its own stock? Now let's talk about something Wall Street loves, stock buybacks. It's when a company uses its profits to buy back its own shares. This reduces the number of shares available, which can boost the stock price. Tesla's sitting on a mountain of cash right now, and there's been a lot of speculation that they might initiate a stock buyback program. This would be a bullish signal to investors. It would show that Tesla believes its stock is undervalued. But here's the thing. Tesla's got a lot of other things they could do with that cash. They could invest in new factories, research and development, or even acquisitions. So, it's a tough call. A stock buyback would be a short-term win for investors. But it might come at the expense of long-term growth. It's a delicate balancing act. Risks and challenges. What could derail Tesla's trajectory? Look, I'm a big believer in Tesla's long-term potential. The company has revolutionized the electric vehicle market and continues to innovate at a rapid pace. But I'm also a realist. It's important to acknowledge the hurdles that lie ahead, and the reality is that Tesla faces some serious risks and challenges. These aren't just minor bumps in the road, they could significantly impact the company's future. We've already talked about the competition, the economic headwinds, and the interest rate dilemma, but there's more to consider. The economic landscape is constantly shifting, and Tesla must navigate these changes carefully. Tesla is heavily dependent on Elon Musk. He's the visionary, the driving force behind the company. His leadership and innovative thinking have propelled Tesla to new heights, but he's also a bit of a wild card. His unpredictable behavior can be a double-edged sword. His antics on social media can be a distraction, drawing attention away from the company's core mission. And his involvement in other ventures like Twitter raises concerns about his focus. Can he juggle multiple high-stakes projects effectively? This split focus could potentially impact Tesla's strategic direction and operational efficiency. Then, there are the regulatory challenges. Navigating the complex web of regulations is no small feat. Tesla's self-driving technology is under intense scrutiny. Any accidents or setbacks could derail their plans and invite stricter regulations. Any accidents or setbacks could derail their plans. The stakes are incredibly high, and let's not forget about the potential for government regulation in the EV market. New policies could impact Tesla's operations and profitability. And finally, there's the stock itself. Tesla's stock is incredibly volatile, often reacting sharply to news and market trends. Tesla's stock is incredibly volatile. It's not for the faint of heart. Investors need to be prepared for significant fluctuations. It's not for the faint of heart. The roller coaster ride of Tesla's stock can be nerve-wracking. Investors need to be prepared for a bumpy ride. The journey with Tesla is filled with highs and lows, but for those who believe in the vision, it can be worth it. The verdict: is Tesla a buy, hold, or sell? So, here's the million-dollar question. Is Tesla a buy, hold, or sell? This is a question that has been on the minds of many investors, especially given the company's recent performance and the overall market conditions. The answer, my friends, is not so simple. It requires a deep dive into various factors that could influence Tesla's stock price in the near and long term. It depends on your investment timeline and your risk tolerance. Are you looking to make a quick profit, or are you in it for the long haul? In the short term, I think Tesla's stock is going to remain volatile. The market is unpredictable, and Tesla is no exception. There are just too many uncertainties right now. From global economic conditions to industry-specific challenges, the landscape is fraught with risks. The competition is heating up, the economy is shaky, new players are entering the electric vehicle market, and traditional automakers are ramping up their EV efforts, and interest rates are rising. Higher interest rates can impact consumer spending and borrowing costs, which in turn can affect Tesla's sales and profitability. I wouldn't be surprised to see the stock pull back further in 2025. Market corrections are a natural part of the investment cycle, but in the long term, I'm still bullish on Tesla. The company's vision and innovation set it apart from the competition. They're the leaders in the EV revolution. Their advancements in battery technology and autonomous driving are game changers. They've got a strong brand, a loyal customer base, and a visionary CEO, despite his quirks. Elon Musk's leadership, while controversial, has driven the company to new heights, and they're investing heavily in the technologies of the future, like AI and sustainable energy. These investments could pay off significantly in the long run. If you're a long-term investor with a high-risk tolerance, I think Tesla is a hold. The potential for growth is substantial, but so are the risks. Don't expect it to be a smooth ride. The journey will be filled with ups and downs, but the rewards could be worth it. But if they can execute on their vision, the potential rewards are enormous. The company's ability to innovate and adapt will be crucial. However, if you're looking for a less volatile investment, or if you're worried about the short-term headwinds, Tesla might not be the right stock for you right now. Diversification is key in managing risk. There are plenty of other fish in the sea. Other companies and sectors may offer more stability and less risk. The bottom line is this: Tesla is a high-risk, high-reward investment. It's not for the faint of heart. Do your homework, understand the risks, and invest accordingly. Make sure your investment strategy aligns with your financial goals and risk tolerance.